Hey everyone, ASML stock is getting a lot of attention lately given the role it plays in the semiconductor industry and the role that the semiconductor industry plays in the development of artificial intelligence. So in this video, I'm going to dig deeper into ASML stock and answer what's going on there, what are the latest developments. So let's jump right into this very interesting semiconductor stock.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so in its latest quarter, the company delivered net sales at 7.2 billion euros. They shipped 10 EUV systems and recognized 2.3 billion euros revenue from 13 systems this quarter. These systems are very expensive, so the company can generate great deals of revenue from relatively few system sales. They've got strong pricing power given their competitive advantage, given the fact that they're the only ones really producing these systems in the development of semiconductor technology. So one of the things they also do is service those systems that they've sold, and the installed base management sales for the quarter came in at 1.6 billion euros, which was higher than expected due to additional service and upgrade sales. Here's something I really like about the business, and that is a robust gross profit margin, which came in at 51.4% in the quarter, which was above their guidance driven by higher installed base business. The service and upgrade of existing systems is more profitable for ASML than the sale of new systems. That's partly why the company's gross profit margin was better than expected in the latest quarter, as more of its revenue came from installed base management. Net income for the quarter was 2 billion euros, representing 28.3% of net sales, which is an excellent net profit margin for any company, but especially the company that sells mostly hardware, right? That's a really strong profit margin, among the best of any company doing sales of mostly hardware products. Here's another thing I really like about ASML's business is that they've got a strong backlog. In the fourth quarter, they generated net system bookings of 9.2 billion euros. So they generated more sales for later on, a backlog, than they generated revenue in the current quarter. So their backlog is growing because they're fulfilling demand. At the same time, new orders are coming in more than they're able to fulfill right now. And we're going to see a little bit later, they're investing in capacity growth because of this reason, because they see more demand coming in than they're able to fulfill at their current capacity. So for the full year, revenue increased by 30% to 27.6 billion euros with a gross margin of 51.3%. Excellent, right? You're seeing growth at 30% at a healthy gross profit margin. This is strong. You don't like to see sales grow at the expense of profitability, and you don't like to see profit margins grow while sales are impacted. You like to see both moving in the right direction, and that's what ASML delivered to investors in 2023. So at the end of the year, they finished with a backlog of 39 billion euros. And if we do a quick comparison, their backlog of 39 billion compared with their full year net sales of 28 billion means they've got over a year's worth of backlog in their sales, right? They can go 1 year delivering these backlogs without suffering any decrease in revenue given how strong their demand is. But that's not going to be the case because there's new sales coming in all the time. And even in the latest quarter, 9.2 billion euros new sales came in, and management expects that for the second half of 2024, sales are going to come in, orders are going to come in even more so than what came in 2023 and in the first half of 2024. So they see this rebound in the business coming as they hit the bottom, they feel, in 2023. Overall, research and development investments as a percentage of 2023 sales were 14%. That's a really high level of research and development spending compared to sales. But when you have a company like ASML that has delivered on their research and development spending, they've shown skill in that, I want them to spend as much as they see fit. right? When I see companies that are good at research and development in developing innovative products that generate premium prices, as is demonstrated by their 51% gross profit margin, as is demonstrated by their industry leading cutting edge technology, I want them to spend as much as they see fit. They have a green light in court, according to me, my opinion. When I see this kind of result coming out of a company, I say keep spending. You know what you're doing. You clearly have done this before. You have the skill. Just keep spending. If you find areas where you feel it's a good investment, go ahead and do it. Don't think twice about it. This is what you're in business to do. This is why I invest in you as a company, is for you to use that money to create new products and services which generate even more profit and sales and cash flow. So I'm okay with this when the company has demonstrated skill and profit before in their past. So I'm happy to see this from ASML. For 2023, they finished with free cash flow of 3.2 billion, and this is not as strong as its net profit margin because, as you can see, the company invests significantly in new generation technology. And for 2023 and 2024, it looks like they're going to be investing in capacity increases. So that capital expenditure is going to be higher. Moving on to their forecast, they see first quarter net sales to be between 5 billion and 5.5 billion euros. That's a sequential decrease from the current quarter, and management discusses why that's going to be the case. So lower revenue and margin relative to fourth quarter is primarily driven by lower immersion volume along with an unfavorable change in product mix. In addition, we also expect lower EUV volume and lower installed base business in Q1 relative to Q4. The relatively slow start to the year is a reflection of the current state of the industry coming out of a downturn. So, as you may already be aware, the semiconductor industry was just coming out of a downturn in mid 2023, late 2023, and that was helped significantly by this boom in artificial intelligence. If there wasn't this boom in AI, there is no telling how long it would have taken for the semiconductor industry to rebound out of this bottom. But thankfully, the boom in demand from AI implementers has brought forward that rebound. And ASML says that, late in 2024 or mid 2024, they expect a strong recovery. Longer term, they expect their gross profit margin to rise up to 54 to 56% by 2025. So not next year, because next year they're going to continue these capacity investments, and that's going to bring down margins. But longer term, in 2 years, 55% midpoint gross profit margin, which is above their 51%. So not only is their gross profit margin really strong already, but they feel like there's room to improve. And that's reasonable to expect given the strong demand, given the increase in capacity, given how their backlog, they continue generating more backlog than their current sales, and their pricing power. I think this is completely achievable for ASML. So a really interesting semiconductor stock for those of you that are interested in investing in the development of artificial intelligence. I think ASML is a really great way to play that trend. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.